So my first time investing in the stock market was back in July of 2019. Since then, we've seen the market drop more than 30% due to COVID, but we've also seen the stock market recover from it. In fact, many would say that we're in a bull market. And during that time, I can honestly say that I learned quite a bit when it comes to investing in the stock market. More importantly, what determines whether you're become successful or not when it comes to investing comes down to habits. That's why in this video I'm going to discuss 8 habits that may be keeping you poor. So if you're someone that possesses any of these 8 habits, then making sure that you get these habits corrected will be key in your financial success. So let's start with the first habit that's keeping you poor, and that's lack of research, right? And we all understand when it comes to investing, we understand that it's important to be educated, right? Whatever you're investing in, it's important to be educated. But we also understand at the same time that a lot of people don't have time, right? So for them, it's easier to just go off tips. It's easier to go off advice from other people than to just really do your own research and figure out like if that's a good investment for you. But that's where people get in trouble, right? Because we tend to be like, say, oh, I had a friend that said, this is a hot investment, or we go with trends like what other people are investing in. So we see other people investing in that same thing. So we tend to follow that crowd and say, all right, everyone else is doing it, then it must be a good bet. But that's where a lot of people get in trouble, because you never want to just follow the herd. You never just want to take somebody else's advice, and you never want to invest in something that you don't understand, right? You want to make sure you have a level of understanding, that you understand the risks, you understand the rewards, and say, all right, how can I benefit from this investment? Like, what are the risks? Like, how much can I lose and how much can I gain from it? And you got to make that determination. And yes, it does require a bit of education, but if you're going to be investing money that means a lot to you, then I think it's worth it, right? So you want to make sure when you're investing in anything, you need to make sure you do your research, making sure that that you're investing in stuff that you understand. If not, then you got to learn it or understand it to the best of your ability. And once you're comfortable, then you understand the risk and the rewards, then you can decide if you want to take on that investment or not. Next, we have chasing quick profits, right? Now, look, everybody wants to make fast money, right? Everybody wants to get that return on investment very quickly. But if you've known anything, like, there's no such thing as fast money that's done legally anyways, right? Everyone understands that when it comes to building wealth, you have to build wealth slowly, right? So you don't want to be going out there chasing quick profits, because a lot of these type of investments are very speculative. They're high risk, and even though they could be high reward, but why even take on that risk? You got to have the mentality that I understand that making money is a slow process, and I'm willing to be patient and go through that process. So you want to make sure you understand that investing in anything is going to take time. So you have to have that mindset and not have this this mindset where I need to make this money quick. Depending on your financial situation, some people like to get in these investments like day trading, or investing in Bitcoin or options trading. Not to say any of these things are bad. I invest in Bitcoin. Not to say day trading, you can't make money doing day trading, but a very small percentage of people actually make money in day trading or options trading, and you can make money on it, but it's very risky, and you have to know what you're doing. Also, Bitcoin, right? We know how volatile that is. Like, I invest in Bitcoin myself, but not a large percentage. But you need to understand that a lot of these people that are doing it, they're trying to make this quick money, and so they're like, these are high, very high risk, so there's a very high reward. But with these kind of investments, I don't think the reward is worth it unless you know what you're doing. So making sure, don't chase the quick profits unless you actually know what you're doing. You've done your research, and you're willing to risk the money that you're investing. But for the majority of people, building wealth takes time, so you need to have that mindset. The next habit is investing emotionally, right? Now, typically, the two emotions that typically get people in trouble is fear and greed, right? And when people allow these type of emotions to dictate their investment strategy, that's where a lot of people get in trouble, right? Because like during times of panic, people get afraid and they say, "Oh, I'm going to sell," and that's when people lose money, right? Even myself, I remember during the pandemic, I was starting the investment process. When I saw that dip in the market, I panicked, took the money out. Eventually, I put it back in, but that was something I should never have done. And if I had more experience, I would have known that eventually the market will recover, and I wouldn't let fear dictate my decision. And there's the same thing that could be said when it comes to greed. People see the market constantly going up, and they're like, let me continue to put more money, knowing that eventually that thing is going to come back down, right? And you're going to lose money that way as well. So allowing being fearful or greedy is not an emotion that you want to let dictate your investment, right? Make sure you have a strategy, making sure you understand the risk, making sure you understand your risk tolerance, right? These are going to help you decide like whether whether you're going to be a successful investor or not. So making sure that you regardless of what's going on in the market, what's going on in the economy, you need to understand that based on your strategy, based on your understanding of how you are emotionally when it comes to how investing works, you need to understand that you're not going to allow your emotion to dictate your investment. You're going to stick to the strategy and make sure, you know what, I'm going to be consistent regardless if the market goes up, whether it goes down, I'm going to be consistent. The next habit is not diversifying, right? Now, like I said, we all know that investing is risky, right? But the way that you mitigate that risk is making sure you have a diversified portfolio, right? And diversifying helps mitigate the risk because you're not just stuck in like one sector, or you're not stuck in just one investment. Like if all your money's tied to real estate and there's a crash in the real estate market and you lose a significant portion of your money, you want to make sure you got stuff in like, stocks, you got it in real estate, you got it in business, and even if it's just stocks, you got different sectors of when it comes to the stock market. So you're just not all your money's not tied into like one sector or just one investment vehicle. And you need to understand that there's up and downs in different markets. Like there's certain things that happen like that can affect real estate, that can affect stocks, or that can affect a certain business. And if you've diversified your portfolio, then regardless of what's happening in any of these sectors, you're not taking too much of a hit, right? So it's important to make sure that you're diversified in whatever investment that you're in, and you don't have all your eggs in like one basket. So the next habit is trying to time the market, right? So unless you're a fortune teller, you have no idea what's going to happen in the market, right? The market is very predictable, right? But we have so many people that think they know that, like, all right, it's at this certain point where I think it's gonna, the market's gonna crash, where I think the market's gonna be up for a bull run, and people try to say, all right, this is the time to invest. This is where a lot of people get in trouble, right? Because if you looked at the data, that the data will tell you that people that consistently invest, majority of the time they're beating people that are trying to time the market, right? And that's the kind of mentality that you want to have. Because no one the market is so volatile. You have no idea. You can't predict what's going to make the market turn or not. And I know a lot of people try that, but you have to get to that idea of where, as long as I'm consistent, I'm investing consistently regardless if the market is going down, then you don't have to worry about timing the market, because then in the end, long term the market is going to go up. Right? You don't have to you don't have to figure out when it's going to crash and when it's going to go up to try to maximize your most profit. Because if you look at data, the people that make the most money are the ones that are investing consistently, right? So just kind of have that mentality that, I can't time the market. I'm not a fortune teller. That if I can do it consistently, in the long run, I'll make good returns. So the sixth habit is ignoring your long-term goals, right? Now, like if you're focusing too much on the short-term market fluctations, and neglecting the long-term, it's gonna prevent you from achieving your long-term goals, your desired financial outcome. And it's important to make sure you have that long-term goal, that long-term mindset, because that's where the profits are made, right? Unless you're someone that's into day trading or options trading or any that short-term type of trading, it's going to be hard for you to like really make the returns that you're looking for long-term. You got to have that long-term mindset, regardless if it's real estate, stock market, business, because that's where the return on investment comes in. So it's important to make sure you're disciplined and stay and understand that it's going to become in the 5-10 year play where you're going to be making most of your money. So it's important to make sure you stay focused and make sure you focus on your long-term goals and not get caught up in the short-term play when it comes to investing. So the seventh habit is lack of patience and discipline, right? So when it comes to investing, you have to be patient, you have to be disciplined, right? Because if you're not, then when you don't see your investment going the way it wants to, you're going to be someone that's going to be more apt to jump in and out of that investment, right? And there's a potential for you to lose out on potential gains, right? And you want to make sure you develop that habit, because that's an important habit to have, because like I said, there's no such thing as fast money that's done legally, right? Building wealth is something that takes time over a long haul. So you have to have that discipline, whether you're starting a business, whether you're investing in the stock market, whether you're investing in real estate. Though you don't see the returns right away, right? It's rare that you see it right away, like the following year. It's something that develops over time, especially when it comes to the stock market, compound interest, right? The more money you're investing and you're letting that money compound over time, you're going to see that money double over hopefully 10, 20, 30 years from now. And you want to make sure it continues to grow. So you want to make sure you have that discipline. You want to make sure you have that patience, because that's when you see the long-term benefit. Now, the final habit is not investing at all, right? Like I said, I understand how risky investing is, right? It's scary for a lot of people, right? Losing your money is a fair here that nobody really wants to deal with. But like I said, like when it comes to building wealth, you have to be able to take on some risk, right? That's where you get the most rewards, right? Now, obviously, you want to be educated, you want to be, understand what you're investing in, but you have to invest. Whether it's in stocks, whether it's in real estate, you have to invest because you can't just rely on active income, right? Especially if you're someone that hopes to retire once you get older, right? You can't just rely on active income, and you don't want to be working till you're in your 60s, 70s, and 80s, right? You don't want to have to work. Right, you want to make sure you've created, an investment that's going to make money for you even while you're sleeping, or that's going to get you through your life. So you want to make sure you're investing and making sure that you're participating in some way, whether it's real estate, investing in stocks or businesses. You want to make sure you're putting your money to work, because as you get older, you're gonna have less energy and you're not gonna be able to have the energy to make that active income. So making sure you're putting your money into an investment that's allowing that money to work is gonna be beneficial for you long term, right? So that's all I got for you guys today. If you got any comments or questions, make sure to leave it down below, hit the like button, share, and if you haven't done so already, make sure to subscribe, right? So you guys take care and have a good one. Later.